We are back at it again here with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. Here we are with the SPY, the S&P 500 index, having another volatile day. And within today's volatility, our SPY bot at 11:10 a.m. sent out a bear indicator. And from that moment forward, the outflows crossed the midpoint to the downside. Pure weakness there on 42 vision, and put options went up 100% plus within minutes to an hour, guys. If you guys want to receive this clarity and edge of the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots, and becoming part of a growing community of investors using these resources to maximize in either direction, whether stocks are going up or going down. So here we are with the SPY hitting another dip area, and as we see it here in the charts, a full transition has happened, and we need to talk about what's going on with the inflow versus outflow and bull and bear indicators. But before we break it all down, I want to share with you guys the home run opportunities mentioned today over at the Discord. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity of the charts, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So the first home run was from our Tesla bot. Our Tesla bot sent out a bear indicator since 11:10 a.m. From that moment forward, the outflows crossed the midpoint to the downside. Full weakness there on 42 vision. Crossed the outflows once again later on in the day. And put options went up 80% plus within an hour, guys. And our second home run, we caught this one in the pre-market. ONCS. We caught this one sitting sideways. We were looking for inflows to pick up. It certainly did. That bull indicator popped up. Full strength on 42 vision. And it hit a highest point of 20% plus within minutes after the bell. And then it pulled back and went for a second run when those inflows crossed back up. Got that bull indicator and hit a highest point of 30% plus, guys. If you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. So here we are with the SPY, the S&P 500 index, continuing to fight here to hold support above 390, 393 area, and getting back towards that 395 support that I talked about since way up here last week as we were doing videos on Wednesday and Friday, talking about how things seem overextended. We had hit a dip area way back here on November 17th and has completed a full transition here on 42 vision. And once that happens, the transitions back down tend to happen, right? And I was pointing that out while we were watching that and looking at that closely. If it's your first time coming across the channel, why with red borders is actually the dip area, as we like to call it, and the rip areas are bright green bars. And then the transitions from bright green to white with red borders is another transition to the downside, right? So it allows us to see the dips from the rips and from the rips to the dips, right? And right now we're in dip area territory, and we need to talk about how 395 is a key area that could either turn into a rejection area to bring itself back down, or the support to bounce off of, as I like to call it, the setup before the next bull run, right? So we need to go ahead and look at these levels carefully here. I'm going to pull up the bull and bear indicators and the inflow versus outflow, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected over to our bots and becoming part of a growing community of investors using these resources to maximize in either direction, whether stocks are going up or going down. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. So here we are with the SPY. It had a bull indicator. Inflows had picked up here since November 21st, and you could see that extra confirmation and full transition there. 2 days back to back of strength, as long as it stayed above the midpoint. Now, on Friday, things had slowed down, and this could be a very pivotal area. I talked about this over the weekend. I talked about it on Friday. We were watching 399, 397, and 395 as support. And below that was the 390, 392 area. And here we are trying to bounce back towards 395. And outflows ever since they crossed over Friday to Monday, we got that bear indicator, pure weakness there, and outflows have been dominating here on these last 2 trading days, right? We've been stuck below it. The inflows keep on trying to come close to the midpoint, but they cannot cross over. And on the 15-minute within the volatility, you could see how short-lived those crossovers have been. Now, this is where it becomes pivotal for tomorrow. If this could stay above the midpoint and pull away from it to the upside, and on top of that, we want to see the 30-minute get closer to the midpoint or even cross it, right? Get back over it, and how that could impact the charts. And we're going to look at that together here. But tomorrow's a big day. We have some data points coming up. You're going to see them popping up here on the screen. And some of the main things going on for tomorrow that all eyes will be set on is employment change numbers, right? And then also the second GDP estimates, right, for the quarter that they're actually analyzing. And on top of that, we also have EIA oil inventories that a lot of eyes will be on as well, and everything going on in the macro and microeconomics. That's going to be big tomorrow. It can make and stir up volatility, make or break this downward trend, or make or break the push back up, right? So there's key levels to watch here in the charts and why certain things move a certain way going into tomorrow. And then also on top of all of this, we've had Fed members speaking in the last several weeks and days, and this is all stirring up, right? And here we are at 395, back below 400. Everyone was seeing and chanting for 405. We kept rejecting 403, and I talked about how pivotal that was since way back here. We rejected it one time back on November 15th. We rejected it again here on the 23rd and 25th. And one thing I do want to point out, and this is not financial advice, this is my opinion and perspective alone. Right now, even though these data points are coming up and it is going to be an eventful day tomorrow and it's an eventful week overall, there's a lot of data points coming out and being released. I am not literally following this. I'm following directly the charts. It's good to know this information, but I'm not basing my decisions based off what the data releases. If not, what does the chart show and how could this data stir up volatility and further move markets, right? Like today, markets moved based off data. Yesterday, they moved based off data, but it's not necessarily moving in the direction of what everyone anticipates based off that data right away. So today, let me zoom in right here just to give an example. On the 5-minute, right? The data came out around 10 a.m. and the markets went up for a whole hour. I'm not going to miss out on an opportunity there if I'm thinking about a bias, direction, or opinion based off data releases. Now, later on, it fell really fast, and then I went ahead and followed what was going on there. But I'm moving with the market's trend, right? I'm not really focusing on the moment data releases. It's supposed to make this happen, make that happen, you know, and I just want to put that out there because a lot of times as traders, we want to know the data, what Fed member is speaking, and they come out and speak, or the data is released, and then we were anticipating based off a certain data direction, a certain direction in the markets. And sometimes it doesn't just go like that. I mean, if I was thinking bearishness just based off today's consumer sentiment, just an example, I would have went ahead and prepared myself with puts, been ready, stated, oh, you know what, consumer sentiment's not going to come in as great, so the market's going to move in the direction I'm anticipating. And then all of a sudden, for a whole hour, the market went up. Puts, if I had them, right, just theoretically speaking in this example, and again, this is not financial advice, these are my opinions and perspective alone, I'm just sharing with you guys my thoughts here. And this right here, puts alone, actually lost 20% to 50% plus within that hour before finally coming back down around here, right, at these levels of 394 or even lower, for it to break even or start going into the positive, when I could have went ahead, took a shot here with the calls and ran up with them and made a 10 to 30% plus move on that slight jump in the markets, right? The inflows picked up. You could see it also on the 3-minute here, the bull indicators, inflows crossing over, doing what I was not expecting, and all of a sudden getting trapped in those puts, that are losing value, but holding through and having conviction in what one understands. Well, momentarily after all that volatility and stomaching that downward trend on those puts, they finally started to print. But why not just go off of, okay, well, things are going higher. I mean, another strategy too is to average into it, but I don't like to average into a losing trade. I like to average into a winning trade, if anything, or necessary for any reason. But that, again, that's just my strategy. That's personal. That's not what I'm here to talk about. I'm just here to point out that all this data is important, but while it is coming out, it is not literally the only way I'm looking at the markets. The markets are in front of us. It's in these charts and how they move. And sometimes they're going to make moves that are irrational and make no sense. And if you actually move with it based off confirmations and strength or weakness in the charts, there's a lot more to actually obtain than to sit around and try to have biased opinions based off of what we anticipate something's going to do or what it means, right? It's like trying to decipher a puzzle. And sometimes the charts are literally showing us what's going on in that moment. Now, here we are under a bear indicator, the 30-minute, and right now it's bouncing off 394 and trying to get back over 395. If this breaks through below 392, 390, the next support is 385. And to the upside, we want to see this break above 397. Okay, we talked about that yesterday. And then 399, 400, and above 400 is 402. Now, inflows are getting really close. This is the closest that we've seen inflows actually get here on the 30-minute since that outflow breakthrough to the downside on November 28th and that bear indicator. We want to see those inflows pick up so that movement can start reflecting into the chart, creating that staircase effect as well, if possible, and getting a bull indicator that can cancel out that bear indicator. That's what I'm going to be watching here on the 30-minute. And on the 15-minute, we need to see here as these 30 minutes are getting closer here to the midpoint. You could see that the 15-minute has crossed over. So we want to see this actually continue to pull away from it, continue with that upward trend, and try to get to those resistance of 397, 399, 400, and then 402. And then the bigger picture here with the 1 hour, guys. These inflows are trying to pick up, but we are super far away from the midpoint, guys. We're way down here, but you could see that the dip is trying to get bought up, and we want to see this continue going higher and closer to the midpoint going into tomorrow and even the rest of this week. Now, if it rejects and pulls back down, well, then that means that the 15-minute, the 30-minute are pulling down with it, and those supports, as I stated, 392, 390, 385 to the downside. To the upside, I'm watching 397, also 399, 400, and then 402. And if these inflows can cross back up with full strength here, because the last time inflows actually picked up was on November 21st. And when it pulled away from it, you could see the moves that happened here from around 394 all the way up to 399. Not guaranteed to move exactly the same, but something to not overlook and watch, especially followed by that bull indicator and full strength on 42 vision. As always, guys, thank you guys so much for watching, and let's make some money.